In Katerina on AM 560, The Answer.
Get the latest weather, traffic, and news updates online at 560theanswer.com. Now, from the Signature Bank Studios. If you're looking for the latest news, insight into what it means, and the sharpest opinion, there's only one station in Chicago where you can turn, and it's this one. We're AM 560, The Answer.
Top of the morning, Dan Proft here. Last week, Treasury Secretary Scott Bessent sitting down with Joe Kernan. Just a little reminder here to set up Trump's press avail with Jay Powell. Uncomfortable. Scott Bessent started to go full Teldar paper on the Fed, which is long overdue in my estimation. Yeah, 33 vice presidents, each making more than $200,000. I don't know what any of them do other than send memos to each other. It's sort of the same thing Bessent was saying about all of these academic economists that populate the Fed's payroll.
I think that we should think, has the organization succeeded in its mission? You know, if this were the FAA and we were having this many mistakes, we would go back and look at why has this happened? I mean, look at as you said at the top of this broadcast, there was fear-mongering over tariffs, and thus far, we have seen very little, if any, inflation. We've had great inflation numbers. So, I think this idea of them not being able to break out of a certain mindset, all these PhDs over there, I don't know what they do. This is like universal basic income for, academic economists.
Trump building upon that in that press avail with Jay Powell, as I mentioned. I mean, really, it's one of those moments that only Trump can do, where he basically takes someone out or sets someone up for public humiliation.
And we're just taking a look at what's happening. It's a tough construction job. They're building basements where they didn't exist or expanding them, and a lot of very expensive work. There's no question about it. And Tim has been with me for a long time, and you're in charge of the committee.
Indeed. One of the reasons I wanted to see it was the overruns of the expenses, wanted to figure out why.
Yeah. So we're taking a look, and it looks like it's about $3.1 billion. It went up a little bit, or a lot. So the 2.7 is now 3.1.
I'm not aware of that.
Yeah, it just came out.
Yeah, I haven't heard that from anybody at the Fed.
It just came out.
He has a piece of paper detailing the cost.
Our notes had it about 3.1 as well.
3.1,
3.2. This came from us?
Yes. I don't know who does that.
You're including the Martin renovation. You just added
our entire capital.
Yeah, you just added in a third building. Is what that is. That's a third building.
Well, no, but it's a building that's being built.
No, it was built 5 years ago. We finished Martin 5 years ago.
It's part of the overall work.
It's not new.
So we're going to take a look. We're going to see what's happening, and it's got a long way. Do you expect any more additional cost overruns?
Don't expect them. We're ready for them, but we have a little bit of a reserve that we may use. But no, we don't expect to be finished in 2027. We're well along, as you can see.
You can always print more money. So, by the way, this whole thing about this 2.5, 2.7, $3.1 billion renovation project, that's some renovation. This is in, I understand it, year 7 of a 9-year construction project. So, maybe Trump is just using this as an opportunity to make life difficult for Jay Powell, which I have no problem with. Use the tools that are available. And whether this was started under Jay Powell or just continued under him, I mean, somebody is finally asking $3 billion for the Fed digs. And you get that, well, he has to be DHS, Homeland Security compliant with blast-resistant glass and so on. $3 billion? Let's talk about the Fed, generally speaking. Bringing in what Bessent said. 3,000 employees, $3 billion building renovations? What are we doing here? Oh, by the way, how was the last decade of performance from the Fed? Jay Powell and the mystics before him. For more on this and other matters, including that tariff piece, we'll get to it. The Capitalist Pig, Jonthan Hoenig, joins us, founding member of the Capitalist Pig Hedge Fund, Fox News contributor, and co-publisher of the recently released Can You Really Love a Dog? Leonard Peikoff and Ayn Rand on pets. Jonathan, thanks for joining us. Appreciate it.
And great to be with you. And boy, wasn't that a surreal scenario watching Jay Powell and Donald Trump there arguing about a couple $100 million of cost overruns, supposedly, when we know the real issue here is that Trump wants Powell to lower interest rates.
Right.
I mean, he has said it over and over again, and not by just a little bit either, Dan. I mean, he wants Jay Powell to lower by 3 percentage points. That would be the biggest cut in American history.
Yeah, I mean, you put a marker down and you hope you get a half or a quarter of the loaf. But I mean, the larger point, too, I think, Trump is not necessarily looking at this philosophically, it doesn't seem to me. I mean, he's not taking the Rand Paul position that Jay Powell should be replaced by an empty chair. But certainly what Besson said and what Trump is indicating, beyond this narrow issue of whether rates should be cut right now, I mean, the performance of the Fed, like the performance of central planners always and forever, has been dismal.
Absolutely, Dan. I mean, you can't go wrong with that because it's exactly right. I mean, the Federal Reserve over time has done a terrible job. But you know what? It's done it basically as an independent entity. And part of what Trump is proposing, for my mind, Dan, just brings the Federal Reserve far too close to the executive branch. I mean, Trump is talking about setting the rate of interest rates below the rate of inflation. Now, if that's not inflationary, I don't know what is. And although I do think that the Federal Reserve and even Greenspan and others before him have done terrible jobs in terms of price stability and the like, we do need an independent central bank. I think merging that or making that too closely with the executive branch. I mean, Dan, you study history. That's the stuff of tin pot Latin American dictators where the executive branch also runs the central bank.
All right, well, let's talk a little bit about this trade deal with the EU that was outlined over the weekend. Trump taking a little time away from Golf Cart 1 and his Turnberry track in Scotland, which I can't wait to play someday. I hope I can play it someday. But that Golf Cart 1 is pretty cool. I prefer to walk, though. But the biggest trade deal ever, that's how Trump characterized it.
I think it's great that we made a deal today instead of playing games and maybe not making a deal at all. I think it's, I'm going to let you say, but I think it's the biggest deal ever made. Thank you very much. Congratulations.
And those details?
So we have a tariff of 15%. We have the opening up of all of the European countries, which I think I could say were essentially closed. I mean, you weren't exactly taking our autos. You weren't exactly taking our agriculture. And then you would have smaller things, but for the most part, it was closed. And now it's open. It's open for our companies to go in and do a good job with it. I think you'll like them. I think you'll like it. And we will, very importantly, they'll be investing a lot of money, but the military is a big number, but that's one number we're not determining. It's going to be whatever it is, but they're going to be purchasing hundreds of billions of dollars worth of military equipment.
And EU boss Ursula von der Leyen on the deal?
We have a deal. We have a trade deal between the two largest economies in the world. And it's a big deal. It's a huge deal. It will bring stability. It will bring predictability. That's very important for our businesses on both sides of the Atlantic. It's 15% tariffs across the board, all inclusive. The investments Mr. President just described that are going to go to the United States and the purchases over there. Indeed, basically the European market is open. It's 450 million people. So it's a good deal. It's a huge deal. Yeah. It was tough negotiations. I knew it at the beginning, and it was indeed very tough, but we came to good conclusions for both sides. So again, congratulations and many thanks.
Thank you very much.
Thank you.
15% across the board tariffs. $750 billion in energy from the EU, purchasing American energy, and investing another $600 billion in America in addition to an undisclosed amount of military equipment the EU plans on buying from American defense contractors. Big, beautiful deal, Jonathan?
Well, I mean, biggest trading partner and a big deal, Dan. Absolutely. I mean, Europe is the U.S.'s biggest trading partner. And I have to say, more than anything else, it's kind of like, straying over the individual details. I mean, this has changed so many times in just the last couple of months, Dan. I mean, on July 12th, it was going to be 30%. Back in April, it was going to be 20%. So I think just settling on the 15%. Interestingly, Dan, that's a low enough number that will most likely simply be passed on to consumers and not result in the widespread onshoring that the president had talked so much about. I mean, originally they were talking about 50% tariffs, 80% tariffs, 100% tariffs that would all but have shut down trade. So this isn't going to shut down trade, Dan, and frankly, it's just going to charge Americans a little bit more to buy imported goods. The EU isn't charging anything for its citizens to buy American goods, but as was mentioned, I mean, Americans will pay 15% tariffs on goods imported from Europe, and that's up from about 1.2% just a few years ago. So is it a good deal? Well, we're going to be paying higher tariffs. I don't know whether that's going to lead to the onshoring that the president has talked so much about.
Well, I mean, outside of your Italian wines, Jonathan, the good news on our side of the aisle is, as you just mentioned, no tariff, so it provides real opportunity for growth in trade for the automotive and the agricultural sectors. At least that's how it was sold.
Absolutely, and trade is good. You know, Bob Woodward famously published a missive of Trump where he talked about trade is being bad. Trade is good, and international trade is good. And I have to say, Dan, although the deal is...
Did we lose Jonathan? Jonathan?
They're going to charge a...
Oh, sorry. Jonathan, hold on. You cut out on us for a second there after you said Bob Woodward, so go ahead.
Oh, sure. No, just mentioning that the deal is done, but there's still a lot of uncertainty. I mean, Trump has still said that there's going to be a 50% tariff on steel, and he's threatened a 200% on pharmaceutical imports from Ireland. So still some uncertainty, although the bulk of the deal is gone, and that's good for everyone involved. It takes so much of those question marks out from U.S. producers, U.S. traders, U.S. importers. And, Dan, like it or not, there's some businesses whose entire business model is importing goods and selling them to Americans. So this it takes care of a lot of that uncertainty that had been flummoxing the economy for months.
I said this at the beginning, at Liberation Day that sent the markets roiling, but we saw this with USMCA. We've seen this with Trump, and maybe now Wall Street is remembering and calming down that some deals are getting done, and they tend to be probably a net positive on balance, and that's sort of where I thought we'd get to. There'd be these machinations, and it would be hard to follow because it's sort of impulsive. Sometimes it seems the positions that Trump takes, depending on the banter of the day between a particular nation or a particular official from the nation. But at the end of the day, what we'll see is on the margins a relatively more free trade environment, which will be marginally beneficial to Americans on net, and that seems to me where we're getting.
That would be tremendous, and if we could do it without the cost of goods rising, that would be even better. I mean, some worrisome signs, and President Trump and many on his administration have pointed out that by and large, goods haven't risen by 10, 15%, for example. But the Harvard Business School, they have a Harvard Business School lab that came out and said, basically since March, imported goods are up by about 3%. So it hasn't been a dramatic increase, but some prices have risen, especially for those goods. And of course, many of these tariffs are now just taking an effect. So story's not out just yet, but Dan, the market's at an all-time high. So I think it's really liking the fact at least some of this uncertainty has been taken off the table.
And speaking of the markets, are you optimistic for at least the rest of this calendar year that we're going to see market growth in the positive direction?
Never bet against this country, Dan. I mean, I've been investing professionally for over 25 years, and this country has the individualism, the character, the dynamism to continue to grow. So I've never bet against this country. What is happening, however, is starting to see an outperformance of some new areas of the market. I mean, you and I, we've been talking about AI for years now. So, you're starting to see some smaller stocks, international stocks, net it all up, and it's just a great opportunity for our listeners to truly become diversified. And more than anything, Dan, get your financial house in order. A lot of people are still carrying around $4,000 or $5,000 worth of credit card debt. Those interest rates are still near their all-time highs. So, with the market doing well, take this opportunity, pay down that credit card debt, get that 6 to 12 months worth of living expenses in the bank. If you can accomplish that, you're better off than 90% of your friends and neighbors. So get your house in order this summer and this fall.
And you're not. I mean, what is the issue that concerns you most? If there was an issue that could impede growth and market returns, is it inflation? Is that the issue?
Well, for me, Dan, it's the same thing that the Federal Reserve has talked about. I mean, the Fed has wanted to cut rates. For them, tariffs has been a big part of it. So absolutely, it's inflation is a kind of issue number one. It's what flummoxed the market during Biden's administration. And I think unless we truly get a handle on it, it could rear its ugly head once again in the Trump administration as well. So all eyes are not just on Washington, but on Wall Street as we kick off another very, very active week in the markets.
Jonthan Hoenig, he is the Capitalist Pig, founding member of the Capitalist Pig Hedge Fund, Fox News contributor, and co-publisher of the recently released Can You Really Love a Dog? Leonard Peikoff and Ayn Rand on Pets. Jonthan Hoenig, Capitalist Pig, thank you as always.
Oh, thank you, Dad. Be well.
You too. And he joined us on the Turnkey.Pro answer line.
Connect with Dan and Amy using the AM 560 mobile app. Download it today at 560theanswer.com/mobile. Gain insight into building strong marriages and raising godly children with Focus on the Family with Jim Daly each weekday at 11:30 a.m. on our sister station, AM 1160. Hope for your life.
Wow. At the time of this being written, both gold and silver are up some 40%. That's 40% in just 1 year. In fact, this past year, gold has broken all-time